Okay, have to talk about the price of oil today that dropped to negative levels. It's never happened before. I wasn't even sure that was even possible, and I'm sure a lot of people have questions about it. So just a quick little background on what's actually going on. Now, to be sure, this is not good, of course. A negative oil price sounds devastating, but it's not quite as bad as it looks. It's a little bit more of how they're traded and some issues with storage, but the actual price of oil is not quite that bad. Now, as I said, to be sure, oil prices are not in a good place. Oil is also an indicator of how the strength of the economy is, and it's obviously not good. And how can this even happen that we have a negative price? Well, first of all, you have to understand when you see the price of crude oil or something, you got to see what exactly that is. It's actually not a spot price, meaning if you were right at the wellhead and what you would get, it's a futures price, and they always quote the most or the one with the least duration, I guess you would call it, the nearest one. So at the moment, that is the May contract, and it expires tomorrow, and that's a little bit why it's off so negatively. So I took a quick screenshot of my TV here, and you see this is the WTI May contract in brackets there, closed down not down $38, but it actually closed at $38, minus $38. But then just 1 month later, the June contract is 21, the July contract is 27, et cetera, and they're back to positive. To be sure, they're all down. The price is low, but there's just a little trading kink. So when you trade futures, that's like the future price of the oil, and if you own the contract at the time of expiration, you actually have to take delivery of that oil. Okay, so this never happens in reality for a Wall Street trader, right? Like someone that trades oil futures clearly never takes that oil. Like they're not sitting on Wall Street and then all of a sudden they get a big delivery of a truckload of oil. Okay, this just doesn't work like that. It goes to this place in Oklahoma called Cushing. You may have heard of this WTI called which stands for Western Texas Intermediate Cushing price. Now it's because the place where they take the storage is in Cushing. Now Cushing is fully loaded up. There's nowhere to store it. So literally these traders were like, oh my god, I'm actually going to have to take physical possession of this oil. This is impossible. I cannot do that, of course. And there was a rush to the door, and prices went negative, and they're just looking for places to actually settle these contracts. Okay, and the world price is usually quoted in Brent. I don't know why it's Brent, but I think it's the most pure oil in the world. It's like the one that needs the least refining. It's usually the highest price in the world, and Brent trades at $25 a barrel. Okay, so still low, but it's actually a positive number. Okay, so there's just this quirk. You don't need to know all the details. It's more of a trading quirk that it's a futures contract that's expiring, and people that normally don't actually take delivery might have had to take delivery of it, and they were just dumping it as fast as they possibly could. Okay, but okay, I hope that's a good enough explanation. But I want to, be careful with everything you get quoted on, even gold. So I'm going to jump over to my screen here and show you, like, here you see the crude, it says crude oil in Yahoo, and that's the WTI futures contract. If you click on it, it actually reveals a bit more information, and it says the May contract, right? And now it's trading, I guess, after hours here a little bit differently. So it's now at minus 13. This gold one, it's actually not the spot price of gold either. It's actually a June futures contract. So when this June one is expired, we'll just roll it over to the July or whatever the next one is. That's just the way it works. We don't actually get spot prices when you're looking at these. So let's just bear that in mind. There's a bit of a trading issue. It's not really negative. If you're a producer, you're getting closer to $20 a barrel right now. There's just a storage problem and a futures contract problem. Okay, there you go. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.